What's up, everyone? It's Scotty with MoneyVest. So, quite funnily, Jerome Powell here dropping the F-bomb in the monetary policy discussion panel. Earlier today, there was a protester for climate change that interrupted Jerome Powell's speech. And if you watch the video towards the end, he pretty much just says, just close the door. And it was, you can just kind of feel the frustration from his tone and just the way he said it. He was just, very frustrated in everything that's been going on. But it was very, very funny. Definitely do check that out. This right here is the clip. I posted this in our Discord as well. Not something that you hear or listen to every single day. So it was quite funny to hear that from Jay Powell. But nonetheless, markets obviously snapping their 8-day winning streak here, as the Dow closing 200 points lower as the bond yields rise. So we got the S&P 500 down 81 basis points, the NASDAQ here dropping almost 1%, and the Dow Jones also dropping over 60 basis points. We pinged right at that level on the lower high. S&P 4400, NASDAQ 13.5, and guess what? We weren't able to break out above that, and then we sold right back lower from those levels on the market. Once again, majority of stocks here selling off, so almost 4,200 companies were down on the day with about 1,800 advancers on the day here. And Powell says the Fed is not confident it has done enough to bring inflation down. So again, this was a part of the speech at the monetary policy discussion panel. I plan to summarize everything that Jay Powell said in another video. But in a nutshell, he says that my colleagues and I are gratified by this progress, but expect that process of getting inflation substantially down or sustainably down to 2% has a long way to go. And we will keep at it until we succeed. And Chairman Powell issued a warning to investors too giddy on the prospects of rate cuts next year. The Fed will be true to its mandate and hike further should inflation reaccelerate as well. Now, here's my message for everyone that I think everyone needs to understand and get around this fact. Jay Powell and the Fed will focus on inflation more than recession. Let me say that again. Jerome Powell and the Federal Reserve will prioritize bringing inflation down more than solving a recession in 2024. That is my opinion. And the reason I say that is because history has shown us time and time again what happens when Jerome Powell and the Federal Reserve, not Jerome Powell, but the Federal Reserve, tends to be a little bit too soft on inflation. In other words, if there's a recession, they start cutting rates and inflation starts to reaccelerate back higher and goes higher than the previous time, becomes a much bigger problem than the previous time. And so they have learned their lessons from 1970s and 80s of great inflation. And if that were the case in 2024, if there is a recession, if there's economic contraction, if there's unemployment going higher, you better believe that if inflation's not back down by then, Jerome Powell and the Fed will still continue to prioritize bringing inflation down over stimulating the economy with the rate cuts to support economic growth and labor market. Let me know your thoughts down in the comment section below, but I do believe that to be true because, Jerome Powell and the Federal Reserve has constantly reminded us of the idea that they're not going to back down on this fight with inflation, and they are welcoming a lot of softening in the labor market. And of course, they're expecting some economic weakness. In other words, economic growth running below trend is something that they can expect moving forward as well. So again, that's just my thoughts. And if that actually ends up happening, then, that's going to lead to some repricing in the markets because markets pricing in 2%, in other words, they're pricing in 2 to 4 rate cuts next year. They're expecting rates to come down by at least 1 to 2%, 100 basis points, 150 basis points going into next year, which obviously, quite honestly, definitely does, result in the markets a little bit of repricing risk, opens that up for that repricing risk because that's been one of the reasons why the market's been rallying quite a bit. Now, the Federal Reserve Chairman Jerome Powell said Thursday that he and his fellow policymakers are encouraged by the slowing pace of inflation, but are unsure whether they've done enough to keep momentum going. And the Federal Reserve Open Market Committee committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. We are not confident that we have achieved such a stance just yet. So more tightening may be necessary. Of course, time will tell. But stocks did not like that one bit, not to mention that we were on this 8 consecutive green day streak. So it's only obvious the markets do pull back, take a bit of a breather, but we're also coming up to that lower high. And this is exactly my point. From my last week's video, I mentioned that this week is going to be a huge technical battle. We talked about this. I mentioned this. We did videos on this. And this is the technical battle. This is literally it. The bulls and the bears fighting it out, and for us to see who ends up winning. And so far, the bears have us on the ropes right now, right? So we are starting to pull right back down. Tesla's down 5.5%. In the entire healthcare sector struggling. Apple, Microsoft, Google, Amazon, all of them pulling back. So in the last one day, again, energy was the only sector that was rebounding a little bit. Everything else was down. And in the last 1 week, we've got a little bit of a mixed market with technology and comm services pushing up. Everything else is obviously selling off. So 4 to 5 sectors in the red. And in the last 1 day, of course, volatility pushing higher. Orange juice for the win. Cotton prices, cocoa, coffee prices, all pushing higher, with oats, live cattle, feeder cattle, palladium prices, all of them pulling back. Bitcoin's up to 36.5 and Ether getting up to over $2,000 as well. So if you come over to volatility, very decent jump, 5.6%. So pushing right back up over 15 levels. So again, that's a pretty solid move back higher. And then if you come over to energy prices, so U.S. oil, we are starting to see that acceleration to the downside, sub $80 a barrel. Support level is going to stay put inside this green rectangle right over here at roughly around $73 per barrel for crude oil moving forward. Bitcoin, as we already looked at, very nice breakout, almost getting up to 37,000, and the next resistance is going to be all the way up to $48,000 for Bitcoin, and of course a massive amount of support sitting roughly at $31,000. Very nice breakout to the upside. Of course, a lot of crypto stocks also did really well, and Ether back over $2,000 with a very, very strong breakout to the upside, up over 8% on the day right now, and next target's going to be 2,100 for Ethereum. Crude oil, the 10-year yield obviously did push higher on the day, up over 3%, and that's resulted in the markets pulling right back down a little bit because of the again, treasury yields. As they push higher, they do put a lot of impact on the overall equities and their ability to actually rally. So the demand for the 30-year auction was not that great, and as a result, we did see some weakness in bond prices, thereby yields pushing back higher. So 4.6% is where we are at the moment. Now, coming over to S&P 500, pinpointing that level, 4,800 was, 4,400 was a level we got up to as much as 4,393, so 7 point off from that resistance, and obviously it's not looking super great. And I mentioned this in my yesterday's technical update, right? Don't fall for this because markets are playing right now, and because of the overbought conditions for the underlying stocks such as Apple, Amazon, Microsoft, Google, Nvidia, Advanced Micro Devices. There's a lot of companies that are coming up to their overbought levels. And as a result, if they start rolling over, well, guess what? The market's going to start rolling over. So the same exact thing happening at the moment. NASDAQ here also starting to show signs of weakness here, down almost 1%. RSI leveling off. MACD starting to roll over and getting rejected at 13.7. We were 3 points off from that resistance. That's exactly why technicals are so important, because they tell us about the price action. They tell us everything we need to know about price action, right? So that's why we can't be just blindly bullish. We have to look at the risk reward. We have to look at, where the markets are lining up. And I will be sharing a few really, really nice trade ideas for the upcoming few days and next week in our Discord and our Patreon. So again, if you want to join and be a part of our MoneyVest community, link's going to be down below. There is a 16% annual discount, and you will get access to all the members-only benefits, members-only private videos, trading view charts, trade ideas, buy and sell alerts, early access to MoneyVest Pro platform, intrinsic value spreadsheets with fair value calculators. Everything's going to be included with the link down below. And again, we'd love to have you on board. So like I said, I will be sharing a few trade ideas with the community members very, very soon, because I do think there's opportunity with a few of them that I definitely want to go over. So that's going to be, detailed out in the Discord later. But moving forward, let's start with Apple. And Apple here, you can see the buying pressure now starting to level off, down 26 basis points. And that was exactly what we were discussing, is that this is not going to go on forever. And we're going to start to see some, halt, or not really a halt, but more like a, fading of that price action to the upside, or momentum is going to start to fade as we progress here moving forward. Because again, we can only go so much higher in such a short period of time. So we're leveling off a little bit. 180 is still going to be that support for Apple. Talking about Amazon. Amazon here also starting to roll over, as you can see. Again, we talked about it in our yesterday's market update. RSI MACD also showing signs of a bit of a pullback. Support level is going to stay put right over here at $134.35, with a resistance and a target staying put all the way up to $146 per share. Again, very nice move to the upside. Support level is going to stay put at 135, all the way down to as low as 120s for Amazon. Talking a little bit about Tesla here. Tesla, I did a video on earlier today. There was a new research coverage from HSBC, Michael, and they're putting a price target of 146, saying that Tesla is overvalued right now. We only put down $90 on the electric vehicle business. So as a result, down over 5.5%. At one point, it was down 6.5%, so getting bought up a little bit from low 200s. But that's exactly where the support is, inside this green rectangle. And we are still very much in this downtrending channel of lower highs and lower lows. So that right there is going to be that resistance. All the way up to this resistance at $251 per share. So that's pretty much the lower high and the lower low. So unfortunately, still within the context of this downtrend, Tesla is. Talking about PayPal. And PayPal here, once again, getting rejected at that resistance at $56, $57. So again, we've talked about this in one of our previous videos. So getting a little bit of that resistance here. Support level is going to stay put at $50, $51 per share for PayPal. And right now we're seeing a lot of weakness for PayPal. I broke down the PayPal's earnings. We broke down Alex Chris's statement and the Q&A with the Wall Street investors and analysts. So all those videos are going to be on the channel. Make sure that you do check that out. But PayPal here, it's going to be action speaks louder than words. So yes, the words were strong. The words were everything that the investors and analysts wanted to hear. But now it's going to come down to action, right? Can the company actually execute and give us some good actionable guidance moving forward, and how the transition is going to take place under the new CEO. So that's really what everyone is going to be waiting for. Visa here, on the other hand, also getting rejected. So not a surprise, should not be surprising for anyone, with the RSI MACD also leveling off. We were already getting up to that resistance at $245. And as a result, we're now starting to see a little bit of a pullback on Visa as well. And the next support is going to be in the low 200. So like 220, 230 is going to be that next level to watch. Of course, all the way down to as low 200s, 210 to 11 next. And we also did have a head and shoulders, but we didn't quite break down. We're just seeing a very nice consolidation sideways with a resistance at 245. Talking about Nvidia, and Nvidia here on the day, it was quite an interesting candle, right? Folks, this is about as clear as it gets. I mean, I know the markets will humble everyone at some point, and I don't want to come across as, like I know it all, because I don't, right? I'm learning every single day as well. But, I mean, the technical analysis on these stocks is absolutely on point. Like, we have to, like, it's crazy. Like, Nvidia getting rejected exactly like at this resistance at 474, 475, overbought, like starting to get a bit more on the overbought side. Same thing happened with Amazon. Same thing happened with, Apple, Visa, PayPal getting rejected at those levels. And these are really important levels to watch. Like most traders, most investors are watching these levels because they are important. We've gotten rejected or supported at that level in the past. And that's why it's bound to work over and over again. Advanced Micro Devices here on the day. So it did break out very nicely, although it is a little bit more on the overbought side. So I actually wouldn't be surprised if we do crack below 112 once again. So that is going to be that more near-term support level to watch for Advanced Micro Devices, and a resistance all the way up to $119, $120 per share for AMD. So that's going to be that resistance. Support level is going to stay put at 112, all the way down to low 100s for Advanced Micro Devices, of course. Talking a little bit about Meta platforms, and Meta here also getting rejected a little bit at 324, 325. Again, we've talked about the resistance at $325. RSI, MACD, a little bit more on the overbought side. At the moment, not quite exactly overbought. So, I mean, RSI is pretty neutral, a little bit more leaning towards the overbought side, but still got a long way to go. So we're not quite there yet. And the MACD also showing some decent gains over the last few days. And again, Meta kind of ended up being green today, even after a very brutal red day on the NASDAQ. So a bit of an outperformance here. So that does suggest that buyers are still excited for Meta, but we are still very much within the context of this resistance, and 325 is going to be that level to watch. Netflix, on the other hand, also consolidating sideways here now, down about 34 basis points. Again, RSI, MACD, very overbought, so just got to be very careful with Netflix here moving forward. Wouldn't be surprised if we do see some more potential, pullbacks or downside. And resistance is going to be at 452. So this right here is going to be that level to watch, with this support level staying put all the way down to 396, close to sub $400 per share for Netflix, all the way down to as low as 348 for the company as well. Talking about Google, and Google here also starting to roll over a little bit. So we didn't quite fill the entire gap. We did a little bit, but of course we're starting to see Google stock also roll over, down about 1%. Next support really is going to be down to $126 per share for the company, with of course resistance staying put at 139, close to $140 per share. Finally, we got Microsoft, Costco, and Enphase. And Microsoft here is very overbought. I mean, I would not be touching this stock at 360s, not from a fundamental standpoint, not from a technical standpoint. But that right there is where the resistance is, at close to $365, $366 per share for Microsoft. Support level is going to stay put at 340, all the way down to as low as 310. But yeah, I mean, take a look at the R side, take a look at the MACD. We are incredibly overbought right now. Finally, Costco here starting to show signs of some weakness as well, down 72 basis points, and that's exactly where we are, inside this red rectangle, inside the resistance for Costco. And next support is going to be down to $531 per share. So this right here is going to be that level to watch for Costco. And finally, we arrive at Enphase. The bloodbath continues, down 1.74%. And the next support, unfortunately, is going to be sub 60. That's the level to watch for Enphase. Right now, there's a lot of weakness. The sentiment's not going to improve anytime soon until rates come down. And so for those reasons, I think we are going to continue to see a lot of momentum to the downside, a lot of weakness here. So shorting solar stocks turns $2.72 billion in profit as high rates, demand slump, and darken outlook. There you go. There's a lot of short interest on solar stocks as well. So wouldn't be surprised if you do end up at sub $60, closer to $59 for Enphase. So hope you guys enjoyed this video and a complete update on the markets. Make sure that you drop a like, subscribe to the channel if you haven't already. I would really appreciate it. And links to our Discord and Patreon is going to be down below. 16% annual discount available till the end of this month. If you have any questions, please feel free to reach out. And as always, happy investing. I'll see you all in the next video.